Hi Ravi bhai.
हाँ like I'm not able to change my status from listener actually like आप वो भेज रहे हो respond करने को दबा रहा हूँ हट जा रहा है.
डोंट नो यार इसके साथ क्या ग्लिच है बट आपकी आवाज आ रही है तो आई थिंक वी आर गुड टू गो है ना.
Okay. हाँ. So like Sunday evening and still we have a decent crowd. Like this shows like investing is really catching up big time. And कल काफी एक बहुत well attended and well discussed and well regarded event भी था TIA का 2020 आइडिया समिट 2024. आई होप नाम मैंने करेक्ट लिया है प्रिंस भाई.
Yes. And for our audience, see, these ideas being presented at the TIA event are in public domain. So by no means we are here to endorse, support, oppose, or anything. It's just that these ideas are doing round, and we'll be having a holistic discussion that whenever such events, be it the Indian Accelerator Summit, TIA, Alpha, or there are many renowned events which happen wherein many renowned financial market practitioners share their ideas. The essence of sharing their ideas is to focus like what the thought process goes beyond that name. Right? Name is the least priority, but again, we always have such biases that we keep on looking for names. So, Ravi and I were discussing that we should have a discussion in the sense that whenever such ideas from such forums come to our mind, or maybe come to us through social media or any other medium, how we should be approaching them, right? Rather than simply going after those names is obviously not a sound or wise decision. But again, those who have attended those session live, they very well understand that what the thought process of the presenter was. But again, there are some notes or names shared in the public domain. So with the reference to those names, we would be having a unbiased, or you can say biased in our capacity, because what we think about that business will be sharing that. So that is not supposed to like influence anyone, be it buy, sell, or hold. Please consider that. Yeah, Ravi bhai.
Yeah, Prince. So, for today's session, as we discussed earlier, I have just pulled out 9, 10 names out of the 20 list, and the others we will be taking in, subsequent spaces sometime later. So, this event has thrown up several names which, in a way, have a very strong potential for, evolving as a very what should I, in simple words, evolving as a good business in coming times. So the first presenter was Mr. G. Maran sir, and the most unique aspect of his presentation was that as a true stock analyst or a true, equity market student, he has focused more on how to develop the approach which enables one to find a particular stock where there can be an ample scope of wealth and fortune creation. So he has identified, he has detailed upon that from where tailwinds, because quite often we hear this word that tailwind, that this particular business or particular sector is having tailwinds on behalf of demand or government policy and etc. But he has categorized three distinct categories from where a tailwind can come for a sector or a business for that matter. He has clearly pointed out that they can be the tailwinds can originate from regulatory, technology, and demography. And this, this drilling down to the threads approach on his part is very interesting because it helps us to, explore on ourselves also that how we can explore things. Because next time going into the future, whenever we come across this term tailwind, we need to identify, where the tailwind is originating, why the tailwind is there. Like, is it because of regulatory things? It is because of technology things or demography things. For example, why this differentiation is important? Because the quality of the tailwind basically depends on its origin. For for just putting out my point, I would say, for example, sugar. So the ethanol story, which has given the entire sugar sector a new fillip, so that tailwind in that sector originating is largely from regulatory. And the moment the tailwind is regulatory, it will have the tailwind itself, the origin of the tailwind itself has its antidote also. That is headwind also. That is what we witnessed around a month and a half back when government curbed ethanol blending from molasses B, and as a result of which entire sugar sector reacted very negatively. So I was very impressed in a way, you can say, that G Maran sir took time to elaborate on the types of tailwinds which we can see and the sheer importance of why it is needed to identify the origin of the tailwind. So Prince bhai, anything you want to add further, or else I will continue.
Yeah, Ravi, and very rightly said. And I mean, G. Maran sir is one of the finest mind we have in our industry, and the way he talked about the domestic private consumption and the demography and household income change, basis that I mean, as he was rightly pointing out that. The export percentage, which is merely if we go by data, is around 16-17%. So the focus of people is more towards that, and on those lines they are missing out the domestic private consumption pattern. So on those bases, very rightly explained by you, and yeah, totally agree to those aspects, Ravi. Yeah.
Okay. So yeah, as Prince Bhai pointed out, then after elaborating on that, the types of tailwinds and why they, identifying their distinction is important. See, we all, majority of us have, lived in a globalized world, and hence, it has been fed into our heads that exports are way critical for an economy's economic growth, and hence we see that nearly all the entire developing world is competing against each other in order to push ahead with their export targets. But then G Maran sir takes a very he spins the bottle on its head by pointing out that why India's economy, yesterday also on a spaces princess space only, there were apprehensions regarding several countries are going into recession, big economies like UK and all. Can India duck the buck? Can India still remain a bright spot or the brightest spots for the global economy? So the core reason for that is which was very well pointed out by Jima answer, that even today 62% of our GDP is domestic private consumption, and exports are 17%. So the huge emphasis has been on the exports part, but then the reality is the resilience in our economy comes from our consumption. And see, so the beauty of his thought is that right from identifying tailwinds to then coming down to one level down, that to coming at the country level. So from there he identifies, in this 62% domestic private consumption, it goes on further to identify themes where there is a very long runway, very long total addressable market ahead. And that market he points out of aspirational Indians, Indians which are in his words only, I would quote, those who are in the income range of 1.25 to 5 lakh per year, I assume here. But then we can still make out a point that he is categorically pointing out at the aspirations which is the upcoming class of Indians is holding dearly to them. And he puts up so many facts, just look at how many households have house washing machine in India, just 16%. In fact, if we go through his entire analysis which he has presented, it's not just one name which you will bump into. There are so many cues. Like for example, this fact only, that only 16% houses have washing machines, that is a direct cue for white goods. You can look into that domain. like then like this aspirational part like will have spillover on like aspirational brands and goods which are available in the market. For example, maybe I'm just, and again, whatever name I take, they are purely for educational purpose. I'm like they are not meant to be taken as any kind of advice. So like aspirational names like for example Sula Vineyard, or for that matter like Ethos watches maybe. So these businesses characteristically point out at the aspiration of the upcoming Indian class. So, and which G. Maran sir has very aptly pointed out. He has particularly, pointed out at a particular firm called Eicher Motors, and we all know Eicher Motors, and specifically, I very personally know Eicher Motors. It's very dear to me because I have had a very long, brush with Eicher Motors for around, I think, 8 or 10 years. I held this particular stock with me. And he points out that even today there are only 1.8% households which own a bullet. And hence he sees like the total addressable market for this particular product, especially when coupled with the aspirations of rising Indians, is huge. And hence like the company has a huge long runway. And most importantly, if we go further into Asher's story, we know that they are venturing big time into light commercial vehicles as well as exports. They are also exploring EV aspect of their existing product portfolio. So it's a robust business, it's a very very strong business, and that's what G Maran sir points out. Prince, do you want to add something or should I continue?
Yeah, good to go, Ravi. And I mean, obviously, and just in case, basis the notes which we received via social media, we are discussing, and in our limited capacity, adding our points. By no means there is any misinterpretation of what Sir has said. So we have not heard the whole conversation. So please take that as a pinch of salt. But again, we are discussing this in good faith and good intent. Yeah, Ravi, we can move on to next idea. I mean,
No, no. So like in Eicher Motors only, like, but then one again following G. Maran sir's cue only, we need to further drill down his, idea itself, like Eicher Motors, the strong traction and tailwind which Eicher has seen in the past, like guarantees no guarantee, of the same traction into the future because the landscape is changing. We very recently saw that how Harley pulled out of Indian markets, and then they again came back within 6 to 9 months along with Hero, and they have launched India specific models which are like very much attuned to the pocket as well as like the taste of like the Indian masses. And the thing is that aspiration is a very subjective term. It might be so that for a particular class, aspiration is one is symbolized by one particular brand, and whereas for the other class, it may be the some other brand. So what I'm trying to emphasize ki while this idea is definitely very robust, very strong, very punchy in itself, but at the same time, we need to take it with a pinch of salt because the competition landscape and even the two-wheeler landscape, because the core aspiration is to migrate from two-wheeler to four-wheeler, and that will work across all age group. So these different factors need to be pointed out, factored in while we are trying to analyze or understand this particular idea better. But then G. Maran sir's beauty is majority of stock pickers, analysts and all, they generally follow you know bottoms up approach because it's always easy to study a company and find out its stage of growth, the deficiencies, the issues, the turnaround possibilities, the optionalities, etc. But it's a very tricky and tough job to go bottoms up. It's like very, in my opinion, it's very beautiful actually. So that's it for G Maran sir. The second business which we will be discussing is by Vidya Bala sir. The like he had pointed out I think landmark cars. So
he
this
he pointed out landmark cars. Yeah.
Yeah, yes, yes, sir. So, like, the thing is that there is a very strong congruence between what G. Maran sir pointed out and what Vidya Bala sir is pointing at. Because, see, the whole idea behind landmark cars is that same thing, aspiration. Landmark car is a very known name when it comes to second-hand high premium grade cars, and like Indians are very value conscious. Like, I was reading a tweet today. I don't remember, recollect the name of the author. Then he said that, like, he pointed out very aptly that there was a lot of hue and cry when, Atal Setu in Mumbai was priced at 250 rupees per trip, I think. But data shows that more than 8 lakh vehicles have crossed the bridge already. So basically, it's not that Indians can't pay or they don't want to pay. If you give them appropriate right value, they will be more than forthcoming to pay. So that's here. So landmark car, see, like, the entire story behind landmark cars proposition is based on that, like, the like overall network of the company and the aspirational mentality of the larger masses. Because, see, several facts have been pointed out, like, for example, Mercedes Benz says that around one fourth of the car which they sell in India, they are in the range of more than 1.5 crores. Then, like, premium car segments growth rate is like at 10%, whereas for mass market growth is it's only 4%. So these, like, figures categorically point at like where the future is pointing at. And, like, the margins in these businesses is also pretty high. For example, their core business is like, that is their showroom, like, business and all, that is doing very low margin, but then still the ROC in the business is pretty high. So that is one key characteristic. And if you drill down it properly, then you will realize that the essence of this entire rise, or the opportunity which we see in this landmark car case, is basically in the fact that aspiration, where people want to go rather than where they should be. So that's the case. Prince bhai, you wanna add on something into it?
Yeah, so basis the details shared by Vidya Bala ma'am, so I totally agree on those aspects, and even the geographical spread of sales and services outlet, be it the high ROC, and I mean she also pointed out that if going forward, that if the import duty can go less than 100%, and that is what Tesla has been demanding lately. So it could definitely benefit in this aspect. And another aspect she pointed out is like to so yeah. So another thing is like in China, the demand of JLR and BMW, the luxury segment is 8 lakh plus, and in India we are only at 40K units at this point in time. So if this increases, then definitely this benefit will also flow to landmarks. Yeah, these are the few pointers which are to my mind, Ravi. So yeah.
Yeah, very aptly pointed out, Prince Bhai. So the thing is that, like, since the document is in public domain and, like, it's all over Twitter, so I'm not going into the numbers and specificities. The key idea here is to, uh, get a hang of where basically these ideas are coming in. Because once we understand that, then we can understand the overall trend of the, like, entire consumption gamut at which, everyone is trying to bet on. So the next idea was by Ankit Kanodia ji. It's a CarTrade Tech. So basically, it is one of those, like, very few new age companies which got listed at obscene valuation, and Mr. Market has shown it the mirror very in a very strict and harsh manner. And uh, after listing at 28 p, if I'm not mistaken, after 3 years of listing, the business is currently at 13 p. So, like, it definitely looks as a prospective case for, like, lot of value creation going forward. because the business has been taking up very nuanced steps in order to push itself ahead. Even this particular business, CarTrade Tech, basically deals with buying, selling, servicing, inspection, etc. of second-hand cars, and second-hand cars, their sales, auction, everything, and like the entire approach which Ankit sir has taken on CarTrade Tech is that like his focus has been on the Vinay Sanghi as an entrepreneur and as a capital allocator, because like he has interpreted things as they have happened in a very different manner. For example, its IPO, CarTrade Tech's IPO was an OFS, offer for sale by the promoter, but then Ankit sir sees it as that the firm didn't need cash for itself. That is, like, the firm was generating enough cash for its own need, and it didn't need any surplus cash from outside, and hence the promoter went for an OFS. So that's an interesting way of looking at things. Be it is right or wrong, that can be subjective, but it is a different way of looking at things. The entire focus is on capital allocation, because CarTrade Tech has been on a spree where it has gone for several very value oriented acquisitions. They have bought Shriram Auto Mall, which has enabled their physical presence across the length and breadth of the country, and has also enabled CarTrade Tech to enter into proper phygital space, that is physical as well as digital presence in both sales, auctioning, etc. Then recently, very recently, they have bought like OLX. We all know OLX kya hai, and that deal is also very value centric, because they have paid only five times. The entire metric was five times earning multiple was given to OLX. So, and CarTrade Tech still carries a significant amount of cash on its balance sheet. So these all factors coming together, and along with the fact that the promoter, of the founder promoter Vinay Sanghi, has had a very long experience in this used car market. As prior to CarTrade Tech founding, he was with Mahindra First Choice for around 9 years. So he knows the business inside out. Second fact is that since this Shriram Auto Mall is actually a Shriram Group company, so we, to a fair extent, we can interpret that the corporate governance standards within this particular Shriram Auto Mall part will be pretty robust. Then, as per the CEO of Shriram Auto Mall, that Shriram Auto Mall vertical is showing very strong growth, 30% per year. The rate of growth is, which they, as per their estimations, it can be further scaled up to even 50%. So that needs to be seen. But a counterpoint which I like when I was going all through all this was that when I went to the review section of various Shriram Auto malls across India, not just Bangalore or Tamil Nadu, or a few places only, the response seems a bit tepid. Either they need to work on making people aware of their presence, or they need to work on to their customer satisfaction aspect. There is something which is missing somewhere, so which needs to be worked upon. But the total addressable market for this particular segment, that is second hand cars, is like humongous. That goes without saying. So further on, so and last but not the least, as I said, the emphasis is in car trade tech's case. The emphasis is more onto the promoter's ability to take the right decision in nick of time, and that is why Kanodia ji opted to Kanodia ji has advised to see Mr. Vinay Sanghi not just as a promoter but as a capital allocator, because he has indeed shown a knack for getting inorganic expansion for his business at very reasonable prices. Then further, one important thing for this company is that the shareholding pattern in this company is very interesting. If you go into the section like the shareholding of FII names and all, there are very quality names which you can come across, and that gives a very fair amount of I wouldn't say confidence, but at least it points you that you should read this business. So that gives a good sense of comfort, but at the same time, the fact that its IPO was OFS on part of the promoter, as well as the in the past we have seen that best of the best funds or institutions, like in this rising interest rate market, can take a decision to trim down their positions, or try to be impatient with their business, the businesses in which they are invested into. So basically that institutional presence in its shareholding is a two-way double-edged sword. We need to look at it very carefully and interpret it also patiently. Yeah, Prince, you want to add something?
Yeah, Ravi, mostly you have covered, but again, the capital allocation thing by the management is the main point of thesis. And again, this business requires very less working capital, so that is again a positive aspect. And even the management is very frugal, as it held on the almost 1000 crore cash for almost 5 years, and they bought Olex when it was available at a very good price. So that also shows the essence of the management. And again, the balance sheet appears to be robust and going forward. And see, we are in a digital era, so many of us who are looking for second hand cars, so definitely we go to or may take or even if we have to sell our cars, so definitely we, at least for trying, we go to their services. And you know, if once a person tries, so definitely going forward the conversion happen. So again, when we say everything looks good, be it the valuation and other things, there are always risk associated. So auto industry down cycle is again a bigger risk, and secondly, the execution. Although it appears that the management is conservative and a good capital allocator, but again, execution risk can always happen, and you never know. We are in an era of disruption, so competition can crop in at any point in time. So these kind of things should certainly be kept in mind. But again, very detailed coverage by Kanodia sir. So definitely, yeah, Ravi.
So the next idea was Abhijit Choksi ji. Yeah, I mean I remember his handle also, Investor Ka Dost. So, yeah, I mean, he has opted for a theme, which, even in my understanding, is I would go to an extent to say a no-brainer. That is the basically shipping and port sectors in India, and he has gone ahead and selected a business in that domain only. So the thing is that the from the very onset, like the current government has been very clear that India, if we have to sustainably go ahead and grow in terms of whether it be internal movement of goods and services, or even for that matter exports and all, India must revive its port capacity, national waterways, because the overall expenses, because India as an entire GDP, if you look at India at one point of time, the logistics was around 13.5% of the GDP, and logistics is a mere enabler. It's a facilitator. It's not. It doesn't contribute anything directly to the GDP per se. It doesn't add any value per se, and hence we must bring down that number. There was a clear thrust by the government, and waterways, seaports, sea routes, etc. They are much cheaper. I think 70 paisa or something per kilometer per ton is the you know charges which are incurred here. So the government has very strong and clear goals in this particular domain, and it has very clearly, delineated that they will be going ahead with 20 lakh crores worth of investment in next 20 years. And there are so many different schemes. If you look at Prince Bhai, I mean, Sagar Mala is there. Then there was this Indian National Waterway Authority was established in order to expedite the projects related to movement of goods and services through our river systems. So a lot of work has been already been pushed in. And since this sector is extremely capital intensive, there is a huge runway still, there for the sector, both in terms of market as well as India's geographical location and its potential, because India is uniquely located where our two opposite coastlines can cater to a very large, global market on either side. So that's there. And among that, this amidst this theme only, Choksi ji has opted for like Gujarat Pipav. It's the company has had its fair share of a bit of checkered past in the past, and it has changed its promoters very recently. So basically, there are two aspects which we need to focus here in this particular case, is that there is very strong regulatory tailwind, you can say it, then government push, you can point out, then also a natural matlab opportunity for India's case. But at the company level, if you look at, there is a very prominent case of management change. And if the new management is able to position the business, which is very uniquely located, and they have facilities related to liquid cargo handling, then roll on roll off ro service, which was inaugurated around 2 3 years back, then handling of dry bulk cargo and all. So these all things are there. If the new management is able to put the business, put the house to order properly, definitely there will be considerable value unlocking and re-rating of the business. But that said, one needs to be very careful that since the tailwinds in this particular business and sector are coming from regulatory tailwinds, we need to be factoring in aspects like political risk first. Second, again, the business is extremely capital intensive, hence the parents uh, financial health will have a very clear implication on the Indian entities working capacity also. So that's pretty much on this one, like Gujarat Pipav. Uh, in my opinion, for such businesses, a very conservative multiple only can provide you with a decent margin of safety, because they do tend to have their own erratic movements also. For example, the recent Red Sea turmoil will be having certain implications on their business also. So these things need to be kept in mind when we study these kind of businesses. Yeah, Prince, add something?
Yeah, yeah. So very rightly pointed out, and despite having excellent parental banking and the debt-free balance sheet, and even the growth prospect in line of the government support and the total addressable market also, because government is going to invest a very huge amount in these ports and maritime sector, and also you pointed out the main trigger point, which is dedicated freight corridor. And if that happens, so it will be like carrying almost 70% of India's good trains, and train speed will also rise with this DFC. So again, there are certain tailwinds, and as you write out, these are amongst few names which are not popular. So again, value is most of the time available in those names which are less discussed, or there are less narratives around. But again, having said that, the regulatory risk, the environmental risk always remain. And on the top of that, like, there is intent from the government, but how the execution happens over a period of time should always be kept in mind. But again, this is one of the business which is to be looked at, because we have a large coastline, and be it export and import, so definitely the trade happens, be it by volume or value, through maritime ports only. So I believe this is going to be a long story, and definitely worth your attention. But again, and by no means any buy, sell, or hold on these names. We do not hold these names in personal capacity, and this is just a holistic discussion so as to bring more things to perspective, so that we can take these ideas as a starting point. And it's not necessary that if we are talking about this particular company, the essence of these discussion is basically you find out some triggers wherein you can also look for their peers, and which are better placed. Yeah, Ravi.
So, hello. Yeah, am I audible?
Yeah, yeah, go ahead, please.
1 minute. So, like, yeah. So the like one of the factors like in this one Gujarat Pipa, like which makes me a bit worried is like the promoter itself, the new promoter. It's Dutch Dutch APM Group, and I'm like right from there like whatever is happening in Europe and like the entire Green Brigade as it's targeting businesses and especially businesses belonging to the old economy domain. Like God knows, tomorrow they will come up with some idea like green shipping also, so that can increase or affect the cost structure, etc. So the second after that we had G Chokalingam sir, and like I mean, I have followed him through the years, and he is actually like you can say that when he speaks, you listen. So he is very to the point. In fact, his I think his presentation was also not that big. He has particularly pointed out at a Birla Group company engaged in telecommunication equipment manufacturing, that is Vidya Telelinks. And like as many of us would be knowing that this particular company has investments across other Birla Group companies, which is more or less equal or maybe even more than its own market cap. So the entire objective in this particular pick was that whenever there is unlocking of those investments, and as there is a very significant tailwind for telecommunication equipments, then from either side we can have a like good value unlocking in this particular business, and which is very much evident. But the only thing is that I at least I believe so that one needs to think that why so often we find that in Birla Group companies there are so many cross holdings. There is a reason to it why this particular scheme of things exists there, and that particular reason can be a factor which will delay, or even to a fair extent I can say that even not allow that value unlocking to happen. So that's my take. You want to add, Prince, something onto this one?
Yeah, Ravi. So, Ravi, it's Vindhya Telelinks rather than Vidya. So, some small correction on that. So, basically, yeah, other aspects you fairly mentioned, and the theory revolves around like either the business is for free or the investments are for free. So, that valuation aspect has been covered by the renowned Chokalingam sir, and definitely Vidya Telelinks is into is its business segments are EPC segment, cable segment, and if you talk about the geographical mix, so most of the penetration in domestic market, which is around 95%, and it has exposure to the telecom sector, and all the key clientele are of the likes of BSNL, MTNL, Indian Railways, Defense, and all the associated companies, Reliance Jio, Bharti Airtel. So going forward, I believe, as you rightly pointed out, there are certainly tailwinds when it comes to the instrument required, be it the cables or telecommunication cables and other kind of and even the EPC segments of across barring telecom only. So the EPC companies are broadly doing very well in light of the I mean anticipated infra spend and actually which is happening on ground also. So definitely this is one of the companies we can have a look at. But again, you should not be simply jumping on the names and simply end up buying these. You have to take these discussion as a starting point, and after that, if the things fall in place, so definitely you can monitor the company and take a informed decision. Yeah, Ravi.
Yeah, very well pointed out, Prince. So the company's name is Vindhya Telelink. विंध्याचल वाला विंध्या है. वो writing में विद्या लिख दिया उसने. Okay, okay. And second thing is as you very aptly pointed out, Prince Bhai, that this particular sector is witnessing lot of tailwinds, and again the origin of that tailwind is somewhere in regulatory tailwind. So for a company with this kind of overall volumes as well as which has had a very fair share of its run up also. The valuations need to be looked into rather than jumping into whatever name we are coming across. It will be better that we keep these companies on our radar and we explore more to understand them better. So
Yeah,
that's there.
Ravi, so what my observation is when I mean a company is discussed on any public forum, right, or be it the event or any public forum or maybe any advisory releases any company name. So we normally see some craziness the next reasons because nobody want to miss that out. But again, my experience had been so, barring 1 or 2 days after that, things settle down, and it's never like something will run out of the. I mean, if there is some good investment in a day or a two, it doesn't happen that it will be like a doubler or tripler, barring like exceptional cases wherein SME IPOs are opening at 3x or 4x. So again, we should buy ourselves time so as to take an informed decision. So initially, there would always be some kind of I mean, more demand coming for those names. But again, wise would be to study more and keep those things in your watch list so that at some point in time, the investment comes to you rather than you going after the investment. Yeah, Ravi.
Yeah, very well pointed out, Prince Bhai. So the next speaker was Mr. Prajesh Maru sir, and he had opted for he mentioned a company presented on a company called, by the name of Control Print Limited, and as a disclosure, I hold this company, and hence the presentation by him and the PDF is in public domain. But for control print, one needs to understand that again it's proxy to the consumption theme, which is being pointed out by so many experts here. And as we go ahead with more and more formal economy, the scope of industrial printing and labels etc. will increase. Even for that matter, e-commerce also. So and they work on a very unique business model where they earn their revenue via sticky revenue. Their revenue is very sticky. That is, they earn money by the inks which they sell. The machine which they install is, I think it's at nominal price only. The real cream of the business in the recurring business. And the word here is recurring is very important because the quality of revenue in such businesses is actually much better than other businesses. So furthermore, this entire business, its entire sector actually is largely oligopolistic with 3, 4 players, 4, 5 players, capturing a huge chunk of the market. Majority of the players in this domain are MNCs and Control Print. Despite of that, being a small company, being from in which has evolved in India over time, still manages to command around 19-20% of the market share, if I'm not mistaken. The key trigger, for this particular company is that an acquisition which they did in Europe, that is yet to reflect properly in their business and in their numbers. And even with the recent run up, the company is very modestly, if not very deep value priced, very modestly priced for the kind of margin which is it producing. And the management in, I think, in recent meetup only, it has guided that they will be able to maintain 20-22% returns going into the future as well. So that's pretty much there. And yes, there are other triggers also, some there was a couple of months back, there was some government guideline, regulatory guideline that the printing which needed basically the the printing on medicine backend to be increased. So those things are there, and they are present in different types of printings, cold printing, hot printing. There are very different types of printing, and they are definitely by large one of the most efficient pair of their vertical. So apart from the valuation as sorry, it is something like, which will not go bonkers, like, people have been used to these days thanks to SME and other, like, stocks movement. But it can be definitely a very strong, not a consistent compounder one, but a slightly more stronger and reliable, like, compounder, which will grow along with the, overall, growth of Indian economy. So that's what I make of it. Prince, you want to add something?
Yeah, Ravi, as you rightly said that you have investment in that. So for our audience, please consider these views as individual and biased. And I would sincerely request you to take these ideas as a starting point. On the top of that, one point I would like to mention, Ravi, the RFID chips which they use so as to detect the third-party consumables, and that leads to the warranty revocation. So that is one good thing wherein, because we have normally seen that what people do is like they buy printers, and the ink cost is I mean repetitive, as you rightly said. It's an so basically usme the challenge is like when people used to uh, 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 go for some second third party, in the sense like local consumables, so those could be avoided with this thing. And as you were pointing out, the majority of revenue is coming from the consumables. So that is one good aspect as far as this company is concerned. And again, it's a debt free company, and the valuation, as you rightly pointed out, are not so high and not so reasonable. So I mean, that is valuation is again a moving point and a individual choice, because some people believe in deep value, and some people have an perception that if there is growth visible, then definitely they can pay some extra bucks for that. And definitely the razor blade business model which you pointed out, that they sell the printers almost at their cost, and look for good margins at the consumables, and it's a sticky business. And the regulatory thing, many products now need compulsory QR codes and declaration. So with that, this also provides opportunity going forward. And let the acquisition which happened bring more synergy to the business. So definitely this will be going forward do well. But again, as we say, there are positive about the business. So going forward, it might also happen that the business might experience more competition, and so there are definitely, and there could be slowdown across industries. So that is again a risk. So in such cases, we should evaluate both the aspects. Yeah, Ravi.
So a couple of more points on control print prints. The management is also very transparent and they are very forthcoming in sharing, whatever they are experiencing in the business, and they are pretty like, like cautiously optimistic. They do not go overboard with their projections also, and they are like, periodically they conduct con calls and all, where like, there is, good enough communication by the management to the shareholders, like, what they are up to. So that's there, Prince. And then we move on to the next idea is, and the final idea which I have studied so far is like, by Arvind Kothari sir from Niveshai, I think. And yeah, he has pointed out at a firm called KDDL Limited. But the very essence of his theme, also his pick, also is basically aspiration and consumption. For the uninformed, I will tell that KDDL is basically like, into like precision engineering and what and manufacture several watch components, and they are also the holding, like not the holding company, but they hold 50% shares of Ethos watches also. So if we go for direct comparison, like, they hold 50% of Ethos watches, which would be around 3,000 crore rupee worth of as of today, and that is approximately the market cap of KDDL today. And like, they have been growing their business very like in a steady manner, and they have been venturing into like, different parts of the watches so that they can gain more business and add up onto their margin. Arvind sir has very aptly pointed out, like, for example, a metric that like average selling price for a watch is around 1.8 lakh in the premium segment we are talking. 5 years back it was 60K. So the entire, that is why initially itself I pointed out that the entire focus of this particular pick is aspiration and consumption. So that's there, and yeah, the company plans to go venture further into other, like premium segment items like suitcases, etc., where they can further leverage their brand value and all. So that's there. So the only flip side to KDDL which I see personally is that, like, again, the volumes of this particular stock and the overall run up which it has seen in past few years, you can very evidently see that the run up is more because on the PE re-rating side rather than growth in EPS, and which definitely makes a point for very approaching this particular firm in a very cautious manner. So that's pretty much from my side, Prince Bhai. You want to add something on KDDL?
Yeah, Ravi. So, Ravi, as rightly said, and even in this segment, as most of us had a perception that the smartwatches these days could be a potential threat. But again, a data point which has been shared is that for watches which are sub odd less than 50K watches, so definitely smart watches are a threat. But for luxury watches or a Swiss watch, exports are rising. So in those lines, like this segment, the premium segment, the comparatively the threat from smartwatches is comparatively very less, and people who have money, so definitely, and there are specifically watch lovers, so they also have they keep a good collection of watches. So definitely this trend is increasing, and as the average selling price, which was around 60 70K 5 years ago, has now moved to 1.8 lakh. So definitely this is showing that the segment is growing. But again, how much of that is in price should always be looked at, and there could be a possibility if slowdown happens, then the inventory may pile up, and even the reputational risk, wherein you see across the market you always get copy for watches. So that is again one threat. And after that, if valuation are not in your favor, again, we are not saying that for this particular counter, but again, broadly you have to see, because valuation is again very individual, right? So that has to be taken with a pinch of salt. Yeah, Ravi. So Ravi, if like we have more names to discuss, we can discuss. Otherwise, we can take questions from our audience, and after that,
No, no. So, Prince Bhai, so for today, these were the names which I had gone through properly. So I think the remaining names, I think around 11 names are remaining. I think we will take it in the next spaces. So yeah, we can, open the floor for any questions. Like, I don't know, what questions will be here.
so for our audience, if you have any questions around the discussion, so I'll be happy to approve your request, and even something related to the segments which we discussed, will be happy to take your questions. So I see one request. Let's see what he has. So Sonu, you are a speaker now. You can ask your question. Got dropped or what? So once again, so Ravi, I mean, although individual name we discussed, and with proper disclaimers and all. So anything more on the segments which we discussed today, be it the technology companies or port companies or luxury watch segment or luxury cars, anything more on that? Meanwhile, if we are if anybody has any answers, so meanwhile we can discuss around that.
So the core essence of what majority of the names which we have discussed here, Prince Bhai, is focusing on consumption. Because you see the external sector of the economy, that is exports aspect, is a bit unclear right now. Especially with European countries struggling with their economy, and a lot of issues arising out of various conflicts across the globe, like Russia-Ukraine war, and now the Red Sea conflict which is going on. So the core focus is on consumption, and in consumption, the aspirational part of consumption is what being pointed out as where the future like lies. So that is what I'm being able to, make out of the names which we have gone through. Yeah, as far as technology is concerned, so in for our market, Indian market, the technology aspect, the technology sector, if we look at the the second string players, IT companies, they have performed way better than the top end players like the likes of Infosys and TCS, and we will have to see how that particular sector further evolves. There are cases of management change, there are cases of where the entire operation of the company has gone for a change. Then there are companies which are adapting to from the services part of the business to product part of the business. They are utilizing very innovative uh, approach where their cash flows are relatively much more sticky and reliable, like the subscription model. So these things are there, and we need to look at them from case to case basis, because the very nature of technology is such that it's disruptive on one end, and at the same time it is very capital intensive also. So companies often, especially the ones who are onto the services side of the technology, they take a considerable amount of time in order to ascertain that which particular technology will be here to stay, and hence they can put in invest their manpower, capital, etc. for serving the same. So that's my take, Prince Bhai, on the.
Yeah, Ravi, and a very important aspect in the market is we should be open to everything and we should not be keeping any biases of not investing in, say, the PSU companies or the technology companies or XYZ companies. Although it could be a possibility that those companies are outside your circle of competence and you can surely avoid those pockets and invest somewhere else. But again, you should always be open to learning because you never know from where you can connect dots to your investments, right? So we are in a global era wherein all the things are interconnected. So and primarily focusing on the value chain and the demand supply equation, we can broadly know what's happening across the industries. And what I have normally seen, the issue with the retail, which I am also part to it, is that we often look for confirmation biases. If some name is coming from three or four, or maybe one or two reliable people who have good social media presence, so people take that for granted that this is a good investment. Obviously, that could be a good investment, but again, as we say, whatever is in public domain, how much of that is already in priced, that is the one thing we should be looking for. On the top of that, we can certainly take ideas from people who have a reputation or who share their thought process. But again, on the top of that, when you invest, the ownership of investment should be yours. Having said that, what I mean is that you should not be running after that person, because that person is under no obligation until unless he's an advisor to you. So in such cases you end up messing with your money, in the sense like you invest on somebody's conviction, and you never know that what can go wrong with that investment, and what that person has as far as intention is concerned. And even if the intention is positive, you never know when the economics of the business go wrong until unless you track it personally. In such cases you end up losing your hard earned money. So that is never a good advice. And also recent case of front running, as we saw on Z News, so that is again an eye opener for people who are simply investing on news, TV channels, social media, or be it our spaces or anybody's spaces. So making money in the market is not a easy thing. Losing here money by various means is very easy. So you have to make an informed decision. Yeah. So Sarabjit is one speaker we got. So Sarabjit, you can unmute and ask your question.
Hi, good evening, everyone. Uh, I just want to add here. I have been observing from last 1 year, uh, almost all the neglected sectors and stocks, which most of the fundamentals analysts or people, they won't be like to pick it up and has got 4x, 5x, and so on. The thing is, currently also it's happening during the last December quarter results. There are plenty of stocks which have posted very bad results, and after a slight fall, they are again just shooting up again. So, as per my opinion, I believe the current year also for the popular stocks, which are considered to be very good in terms of fundamental and a good business and longevity as well. Uh, they would remain suppressed, but the action would be coming into the stocks which are either really worse into the fundamentals or the top best. I admire Trent and Force Motors. They both are excellent in terms of their performance in order to the business sales growth as well. But on the other hand, if you look at like a paint sector, uh, this has been posting back to back like this quarter, last quarter. Most of the paint sector companies has been posting very good results, but still the stocks are not moving up. Even they are trying to shoot up after good results. Someone is is holding the stocks and don't want to let them go up. So they are just controlling the stocks into that particular level. So from I am still believing like a media sector, I am holding UFO movies, which from my point of view is going to be like 2x, 3x from here.
Sarabjit,
Uh,
Sarabjit,
so,
I am
sorry.
stop you because we are not here to make any projections on any names because that will, although we are discussing today, which is
Okay.
not normal in our discussion, but again, we are coming with proper disclaimers and all. So thank you for your inputs, and we totally agree on most of it. And we'll come to you again.
So, Prince, can I add something onto it?
Yes, please.
So the thing is that, see, stocks. I love this remark that someone is controlling and all. What one should make out of it, only God knows. But then the thing is that we need to understand, stocks behave on primarily two aspects. That is, one is EPS, earning per share, and the other one is PE. The PE force, that is the perception of that particular business, is way more potent in terms of pulling the price rather than the EPS part. Because yes, earnings are real world things, they will happen on day to day basis, they will grow gradually, so it basically takes a lot of time. The perception aspect of things is the one which pulls a business very strong. For example, if we take out, talk about the PSU performance in recent times, the perception is that the government is going for very large big ticket capital expenditure, and hence in future they will do something. Okay, what will happen only God knows, but the perception is that, and as a result of which they all are witnessing very strong PE re-rating. On top of it, majority of, like, when Sarajit started speaking, neglected, he said that, not discussed too much, neglected. So we need to understand and appreciate the fact that wherever there is neglect, and that is the place where generally things go for, very deep value. And in life, as in markets, mean reversion is imminent. So in those counters, there was a huge scope of mean reversion. And then on top of it, because of this, significant capex exercise being undertaken, there is a lot of, futuristic prospect also. And as a result of, we have seen a lot of price action in those counters. Coming to the paint sector, it's a very good example of how that PE things work. The thing is that there have been announcement by very big conglomerates that they will be entering, or they have entered into paint sector. As a result of which the PE of the paint sector biggies, despite of healthy EPS, is correcting. That's what one needs to keep in mind. That's what I wanted to add, Prince.
Thanks, Ravi. So Sachin Chandra sir is also there. So Sachin Chandra sir, over to you.
Good evening, Prince ji, Ravikant ji, and all.
Good evening, sir.
This Good evening. This Chennai Meet 2020 Idea Summit. It was kind of few fantastic names. Uh, One clear trend appears to be towards premiumization, and be it Eicher Motors, be it CarTrade, and although in consumption as a whole, there is a distinct trend towards premiumization that we come to see, and it was quite in line with my expectation also. Uh, I was expecting few names in the chemical sector, but there appears to be deep pessimism in chemical sector. No names come up, and that gives an idea that there may be some deep value in some chemical counters, because वो एक कहा जाता है कि जब कोई उसकी चर्चा नहीं कर रहा हो तो मुनाफा वहीं पे आता है, वैल्यू बाय वहीं पे हम हमें मिलता है. So this was and about Eicher, the pointers that were mentioned about Eicher were quite in line, and as Ravikant ji also mentioned that those factors are a pro for Hero Motors also, and I take it that way that those factors are pushing up Hero Motors sales, and that was a good, I mean, kind of confirmation of my personal thesis. That's
Thank you,
all.
sir. And for our
I think,
audience, like as
yeah,
a disclosure, Sachin sir has already shared on his handle. So he has personal investment in
yeah, yeah,
Hero. So you can consider these as
yeah,
individual and biased views.
yeah,
And
yeah,
totally agree to that answer as you were rightly pointing out about chemicals. So one thing I'm again by no means any disregard to anyone or the pressure of presenting the ideas could push a person if say person has 10 ideas, right? And if we specifically talk about the chemical sector, so there is a possibility that next 2 3 or maybe even more year or so can be stretched in the chemical names. So and the people, the majority of market participant these days are expecting daily movement, leave
yeah, yeah.
aside monthly or quarterly or whatever. So maybe that could be one possibility that most of the majority in this bull phase has covered the ideas which are in line with the momentum thing. So that could be a mere possibility. But again, I
Very,
could be totally wrong.
very likely, very likely. Yeah.
So,
So
like one thing I wanted to add, Prince, by here, Sachin sir gave a very good example, how to correlate an analysis to your decision making. So he is not hell bent on the names which we have discussed, but the thesis which was shared onto a one particular name. He has used that thesis for you can say for his own confirmation bias, we can say to an extent. And as far as chemical names go, Prince Bhai, I personally feel that uh, one aspect is definitely that which you clearly pointed out, that people want to play safe, but at the same time even with this current scenario where earnings have been falling significantly, for chemical companies, their PE hasn't yet corrected very sharply. As a result of which, valuations still are pretty strong in majority of the, quality famous names, I would, say. So that is also one of the reasons, like, that we are not seeing, any chemical names in this entire list of 20, picks.
Prince sir, you have discussed one idea like
Yeah.
KDL. So, how much growth we can expect in that KDDL? And as you know, KDDL is having operating business like Ethos. And so, how we can compare Ethos and Titan? Titan is also having the similar product. So, are they competing in for the? Are they chasing the similar kind of customer, or their operating area is different? Like Titan is chasing lower segment, premium segment, but lower yield, or Ethos is targeting mid segment. So, can you give some light on that?
Ravi?
Yeah, Prince, I will answer that. So, see, the thing, sir, like, the thing is that, like, the market segment for Ethos and, like, Titan is completely different. Because if you go, like, to an Ethos watch shop, I think the cheapest watch they sell is around 1.5 lakh rupees. And the most expensive watch line, which Titan has recently introduced, वो watches रहती हैं gold की बनी हुई, कुछ उनका नाम मेरे को याद नहीं आ रहा है. So that is like to the tunes of 1.25 type ka lakhs. That is the uppermost limit. So the segment is pretty much different. Second, like we need to understand, like Ethos focuses on getting European watches, already extremely popular and expensive brands, to India, and that is why that that aspect of aspiration is very important here. So both are like, though both manufacture watches only, both have watch shops only, but both are complete, in my opinion, both are completely two different businesses, and two, even their end product, maybe physically you will say that both are watches only, but one is I have arrived in life and the other is I am living life. So that's a huge, difference which I see. Uh, is that the answer you?
Yeah, Ravi sir, thank you for your answer. But how much growth we can expect in KDDL?
Sir, KDDL, like, growth, I mean, see, first of all, it holds ethos to a very considerable extent, 50%. So that will also play for it. And at the same time, they are looking to expand into more product verticals. This is what I, have read about KDDL in recent times. So, like, I cannot, comment in terms of a particular number, but like, as they have performed so far and given the, the space for their growth still left over. Like I think the growth for KDDL should be robust.
Okay, thank you, sir.
Yeah.
So, Babulal sir, you have any views around or maybe any question to substantiate? I mean,
No,
around the
basically, yeah, my question is regarding energy transition. We have all been talking about geopolitical problems and all that. If this was a case 3 years back, the oil would have been $150 a barrel, but it is refusing to go beyond 80 because, as per one article, the consumption of gasoline for automobiles will peak out in China by 2025, and the transition is very fast. Now, this transition will not remain only for the crude oil or the consumption or the equipments depending on that consumption. There is going to be phase change disruption. Is that being taken into account while talking about any geopolitical area or any country or any product line, but more particularly about automobiles and the energy sector? Because the change is going to be phenomenal.
yes, sir. Ravi?
So yeah, I mean, like I mean, change is definitely seeping in, but there are lot many different factors, and the problem with this world is that we tend to see things not as they are on ground, but as they are in our heads. People who want to push ahead with green energy renewables, they will seek out confirmation bias in, like stats, like as Babulal sir pointed out. But then the reality is that, like, last week only $250 billion worth of, investment have been poured into fracking, shale fracking in Texas. And Venezuela, after, I don't know how many years of ban, has been allowed to export its oil, and its oil is flowing in the market at the cheapest rate. So there are, several factors which are at play, and there it's a hodgepodge of several factors right now. And as an investor, I'm not a tech enthusiast at all by any means. Like, I like to admire things, but my core focus is on my money. So, I would be better placed on the sidelines to see and understand how things are going to evolve in a much stable and sustainable manner, rather than, jumping onto the ship that this will happen or that will not happen.
Right, Ravi. Babulalji, anything more on this part?
Yeah, yeah. See, I'm just judging by the kind of liberalization taking place in most Orthodox Middle East. And the writing on the wall is very clear for them that in few years there will be big transition, whether people accept or not. Things are going to be very, very different. If most Orthodox country is becoming liberal, that itself means they are seeing writing on the wall. That's what I want to say.
That's a very great point you just picked, Babulalji. So we are in an era of disruption, and going forward, in the back of their mind, they have that it could be a possibility. Although, for example, EV, which has been I mean, frontline as far as narratives are concerned in the stock market. But again, if that happens big time, so definitely these OPEC countries will have an impact, and on those basis, they are trying to look for other sort of revenues for them. So that could be a trigger. Definitely, that the changes that should be studied for sure. Ravikant, anything you have to add?
No, so, what Babulal sir has pointed out is very right. It's, I mean, I wouldn't go about the conservative part, because again, change has no one single reason. There are several reasons. Even within the cultural milieu of those countries, there can be a very significant demand for certain changes. So, change is definitely there. And what Babulal sir has pointed, that change is definitely ushering in. What my point is that, since it is so unclear right now, and that is why I always make a distinction, whether you are a tech enthusiast, or you are an entrepreneur, or you are an investor. Based on that, you will have to take a call. So that's what. And yes, Babulal sir, I mean, we all know his, acumen and understanding of things. So, he's spot on what he said.
And since we
Thanks.
are yeah, yes, sir. So I'll also invite Babulal ji to this discussion. So basically, the companies which had been off lately, or maybe say in the past, rejected by most of the investors, or maybe people were not positive about their aspects, and the companies are like have existing capacities and big land parcels. So those companies are slowly and gradually picking momentum. So this theme, you think, Ravi, can play going forward, like as we have seen in many companies, re-rating has happened lately.
Yeah, Prince Bhai, that has always been the case. The thing is that, as one of the, listeners pointed out, I think Sarabjit, people often tend to go for like fancy names which are being discussed, stock which are showing very strong momentum. So it basically depends on your style of investing, and, what thesis you want to, along which you want to develop as an investor. So, for example, again, Babulal sir is an excellent, person who has a very keen eye for identifying businesses which are showing very characteristic, signs of a possible turnout. So, for him, the more a sector or a business is discarded or not discussed, it becomes an opportunity. So, but for a person who like who is more interested into 1 month return, 2 month return, 3 month return, या फिर daily मेरा stock का नाम आना चाहिए, चलना चाहिए, that requires a very different approach. So, and I think you are also you would agree with me on this, Prince Bhai.
Totally agree on this and would love to hear out from Babulalji how is placing
Yeah,
himself.
yeah.
And
I would like to come on this issue. Company is being valued. So there are two parts you have to make. One is a cultural change for keeping money into Almera, from Almera to forehead. Now that everybody knows, if
सर
company
हिंदी में
shows,
बोलिए वाला लाइन सर.
Haji,
वो हिंदी में आप वो जो सेइंग बोलते हो ना, वो
हाँ,
कपाट का
हाँ,
पैसा कपाट पर.
कपाड़ पे लाना है. अभी इसमें कुछ चीज़ें इनको फोर्सफुली करनी पड़ रही है बिकॉज ऑफ जीएसटी इम्प्लीमेंटेशन. The ways and means to suck out money have gone down. Number one. Number two, the young generation wants to be known by valuation of their company rather than diamond inside, lots of diamond inside the cupboard. That's a generational change, and wherever generational change has taken place, companies are doing well.
Sir, I have a simple observation. Since last 2 3 years, it's very difficult for value investor because the sector or stock which we thought that would not perform well, they have performed exceptionally well, like railway stocks and PSU stock, and there are so much value or growth stock which has a good business fundamental and all. They are just not performing well. So what we should do? I am one of the value investor. I go by valuation. I religiously follow the valuation, and then only I take decision or call to invest. So for us, what you would like to say?
प्रिंस भाई,
yeah, Ravi.
should I answer on that?
Please go ahead.
तो सर जी, लाइक इफ यू हैव बीन अ वैल्यू इन्वेस्टर तो आई थिंक तो पोर्टफोलियो तो एकदम चांदी में होगा, बिकॉज आपने प्रिपरेशन तो 3 4 साल पहले ही की होगी. एंड नियरली ऑल वैल्यू बेट्स हैव परफॉर्med वेरी नाइस इन previous in past 2 3 years period we have seen. बी इट लाइक अगर मैं सचिन सर का एग्जांपल लूँ तो हीरो मोटोकॉप भी आप ले लो. एट वन पॉइंट ऑफ टाइम द कंपनी वाज अवेलेबल लिटरली फॉर पीनट्स, and from there it has more than doubled. And when a company of the size of Hero and size and capacity of Hero doubles, that that scope is huge and humongous. Furthermore, like if you talk about like certain PSUs which had like very clear cut case for their business going ahead, expanding and growing well. For example, I would point out at Hudco. So, like 3 4 years back, like nobody even bothered to look at Hudco while its dividend yield was more than 10 12%. So I don't think like where value investment is suffering. Yes, we can say that in today's market there is a lot of froth as a result of which pocket of opportunities has gone down, and that's pretty much normal because for a like value investor, he celebrates in a bear market, not in a bull market. So that will be there. But that said, even now, there are very significant good opportunities, from the perspective of value investing. Also, you can look at chemicals, especially agrochemicals, which have been beaten even harsher than regular chemical lot. There are even other sectors also where like there is lot of like juice. There is lot of story and narrative which needs to be understood and analyzed in order to get future wealth creators.
I agree, sir. So basically, what I observed, sir, since last 1 year, basically financial and chemical sector is not doing well. So I could identify few opportunity there, and I have made my position. But I'm not finding any value bet in, especially in consumer segment. They're like HUL and others company. Their valuation is not just getting dent; they are commanding the premium as it was earlier.
So, sir, the thing is that, like, see, there are two aspects of looking at things. First of all, established FMCG players, because of, the reason of their cash flow model, they will always command like a serious premium first. Second, if you want to understand the value opportunity for FMCG companies, you need to just focus on one fact which I will quote right now. India's per capita consumption consumption is like one third of Philippines. ओके, अभी आप चाइना को छोड़ दो, रशिया को छोड़ दो, अमेरिका को छोड़ दो, सबको छोड़ दो, इंडिया आगे जाएगा तो फिलीपींस से तो आगे ग्रो कर पाएगा ना? Like, are you on board on this? And I think we all are on board on this. Okay, and अगर जब हमारा कंजम्पशन एक्सपेंडिचर 3 गुना यहाँ से राइज होगा सर, तो obviously all these FMCG names and especially the premium ones like the likes of Nestle वगैरह etc, they will further gain more market share, they will further gain more EPS. So how you are trying to decipher value, that is also equally important.
Okay, thank you, sir.
Thanks, Vijay. So, one last call for our existing speaker. Sarbjit, you are on mute. Okay, my voice was echoing because he was on mute.
Yes, sir. Hello.
Anything on your part, Sarbjit?
Yes, sir. Actually, Ravi ji ने बोला है अभी, he has given an example of Philippines. Hello.
बोलो बोलो.
जी. लेकिन सर फिलीपीन को हम इंडिया के साथ कंपेयर नहीं कर सकते हैं, क्योंकि जो फिलीपींस का इकोनॉमी है ना, बेसिकली बिकॉज लॉन्ग टाइम आई हैव बीन इन द गल्फ कंट्रीज. फिलीपींस में वो लोग क्या है कि they are just a service class, they are just working abroad, and most of the girls they are working out of their country and sending back the money to their country. तो हमारे इधर वो कल्चर नहीं है, और उनके हस्बैंड उधर बैठे होते हैं बच्चे को संभालने के लिए, और जो उसकी वाइफ है वो काम कर रही होती है. So, I'm sorry, Mr. Ravi. I just wanted to add this point because I have personally seen that Philippines has a different culture of working.
नहीं नहीं, देखिए, you are spot on and that is very much appreciated also, but the thing is that मैंने, ये मेरी आवाज क्यों तो कर रही है?
सरबजीत यार प्लीज स्पीकर म्यूट रखो, दो स्पीकर अनम्यूट होते हैं तो इको होता है.
हाँ, am I audible, प्रिंस भाई?
Yes, yes.
So by no means of imagination I have compared India and Philippines. For that matter, like people living in one region of India itself cannot be compared to the other region of India. Okay, so वो तो आप बाहर कर लीजिए. मैंने एक macro level data बोला है. That is that India's per capita consumption is one third of a country of a size of Philippines. Okay, इंडिया हमेशा जब देखता है ग्रोथ स्टोरीज को अपने चारों तरफ, तो इट लुक्स एट चाइना के 20 साल में उसने क्या से क्या कर दिया है, 30 साल में क्या से क्या कर दिया. ओके, कभी भी इंडिया के पैरलेस में आप ये नहीं देखते हो कि सिंगापुर से कंपेयर किया जाता है, जबकि सिंगापुर की ग्रोथ इवन मोर फिनोमिनल है, बट हम वो चाह करके भी यहाँ पे इंप्लीमेंट नहीं कर सकते. दैट इज वाई फिलीपींस जब यहाँ पे मैं बोल रहा हूँ, दैट मीन्स कि आई एम ट्राइंग टू गिव यू एन एग्जाम्पल कि कम से कम इतनी दूर तक तो हम आगे बढ़ेंगे ना. इट्स नॉट दैट कि अब मैं फिलीपींस से इंडिया को कल्चरली या फिर लाइक स्ट्रेटजिकली या जो भी अली होते हैं उससे कोई कंपेयर कर रहा हूँ. ठीक है
सर एक्चुअली मैंने 2004-5 से कंसिडर किया है. That time we were almost equivalent in terms of dirham conversion to the Indian rupees and Philippine peso. Okay, and उस टाइम पे हमारा मतलब एक्चुअली जो यूएई दिरहम है, इट वाज इट basically it's pegged with the dollar. Okay, according to the dollar, the dirham is appreciating and depreciating as well. So that time we were like let's for example, 1 dirham of UAE was equivalent to 10 rupees of India and 10 peso of Philippines. Okay, now still Philippine currency is getting stronger and Indian currency is depreciating. Can you explain it?
तो देखो, करेंसी डेप्रिसिएशन एंड अप्रिसिएशन का ना ये जो रीजन दिया है ना आपने, वो नहीं होता। ठीक है, और डेप्रिसिएशन के अपने फायदे भी होते हैं, आपके एक्सपोर्ट्स कॉम्पिटिटिव होते जाते हैं। ठीक है, जिस तरीके से इंटरेस्ट रेट चेंज हुए हैं, इंडियन करेंसी शुड हैव डेप्रिशिएटेड, आई थिंक इफ आई एम नॉट मिस्टेकन, अराउंड 20-25% मोर। इट इज द टाइमली इंटरवेंशन ऑन पार्ट ऑफ आरबीआई, जो कि करेंसी को लगातार स्टेबल किए हुए है। जो आपने फैक्टर पॉइंट किया वो वन ऑफ द फैक्टर्स हो सकता है, वो भी सिग्निफिकेंट फैक्टर नहीं होगा सर कभी भी। जब आप दो इकोनॉमीज को और स्ट्रेट अवे करेंसीज को कंपेयर कर रहे हो, केवल फेस टू फेस ला करके, बिना बैक एंड को कंसिडर किए हुए, उस कंपैरिजन का पता नहीं व्हाट शुड आई मेक आउट ऑफ इट।
Sir, I
Right.
can understand. I agree with you as well because India has to devalue rupee because if the rupee will become stronger, then definitely it will affect the exports for India. Because previously the Chinese currency was getting stronger, and now they are facing lots of problems in their industrial growth. So I can understand your point, but just I just wanted to add this thing, nothing else.
Right,
नहीं
Sarabjit.
सर,
I
योर
think
पॉइंट इज
the
वैलिड सर,
assessment
यस
is well
थैंक यू,
taken. Yeah.
यस।
Thank you for your inputs. So, Ravi, I think broadly we had a great discussion today. And again, for our audience, whatever we discussed is purely educational, by no intent or by any far imagination, any kind of buy, sell, or hold recommendation. And the ideas pick is available to everyone on the social media, so it's not like we have taken something without anybody's permission. And again, and the financial market practitioners who shared the ideas might have a different view which we may have misread possibly. So I would assume that you all have taken the conversation as a starting point. You have to exercise your due diligence, because without that, you must be getting many names across social media, especially Twitter, because we are in an era wherein, as we were saying, that the expectation of returns are not yearly. These are basically going on daily basis or maybe weekly kind of thing. So again, the intent of discussion wherein Ravi shared great insight today was to touch upon the points which had been discussed, and as a broader in a broader sphere, so as to find out something good from the trend. Because if we are able to identify the bigger trend, so definitely there would be other pockets wherein we can definitely do deep dive and find opportunities. And again, market is one place, if you respect it, so definitely it will reward you. But again, if you blindly go after it, then definitely you will be helping other people make money. So with that note, I take everybody's leave, and I thank all the speakers who joined today, and especially Ravi, who took out time and worked on the ideas. So going forward,
थैंक्स सर।
also will try to have a session on the remaining ideas. And as I was saying it once again, so once the ideas are discussed and come to public domain, so there is a frenzy of people who create demand for those names. So if you ask me how I go about is, I simply look at the ideas, keep them in the watch list, and in our limited capacity try to do due diligence. And once things settle down, then I may look at those names. And again, although we have maintained that wherever we have a position we have mentioned, but again, in case any names which came during the discussion and we were not able to tell about whether we hold or not, so again, we sincerely say that no name should be construed as any kind of buy, sell, or hold recommendation. So please consult your financial advisor. And the recording I'll be uploading as soon as I get time. And definitely you guys can connect to our handles, and especially Ravi's handle, who shared great insight today, so that we can also come up with more such discussions going forward also. And if you are yet to subscribe to my YouTube channel, which is again the same name, Accidental Investor Prince, I would sincerely request to do so, because it takes 3-4 hours of minimum time so as to upload one video. So small support I can expect from our regular audience. Thank you so much. Ravi, anything on your part, please?
No, Prince Bhai, I mean, it was amazing, and you also added, I think we both, worked on to this very thoroughly because, as you very aptly pointed out, that whenever these names are discussed in wider public domain, there is often, more than often, we see a frenzy behind those names in subsequent days, and while there is considerable quality and analysis which has gone behind these names, investors must put in due diligence, due effort behind these names. Then only should bet their hard-earned precious money onto these names, because money can be borrowed, but conviction can never ever be borrowed.
So true, Ravi. So great note to conclude. And thanks, Babulalji, for chipping in, and even Sarjeet added point, and Vijay had a great set of questions. So everybody who joined us on a Sunday evening, thank you so much for taking out time. And this shows how much of passion and interest you have in equity markets. But again, I would sincerely reiterate that focus on your processes rather than simply doing activity in the market. Until unless your process is robust, you won't be able to make big money. And we are here to change our net worth, not simply make small money. And that could only possibly happen if we do our due diligence and keep a process in place. Thank you so much. Take care. Good night.